The dream of owning a home is perhaps the most successful and pervasive marketing campaign in human history. Since the day you were born, society, banks, and even your own family have reinforced the idea that buying a house is the ultimate sign of making it. It is framed as the safest investment you can ever make. But here is the cold, hard truth that Ben wants you to understand before you sign your life away. For the vast majority of people, a primary residence is not an investment, it is a massive, illiquid, and soul-crushing liability. When you buy a house with a 30-year mortgage, you aren't just buying a roof over your head, you are signing a multi-decade debt obligation that dictates every single move you make. It dictates where you live, which jobs you can accept, and how you spend every extra dollar you earn. We call it the American dream, but for millions of middle-class families, it is actually a golden cage. You are effectively locked into a fixed geographic location, which is a massive disadvantage in the modern economy. If a better job opportunity arises in another state that could pay you 20% or 30% more, you can just leave. You have to worry about listing the house, paying agent fees, and the timing of the market. This lack of mobility is a silent killer of wealth. Furthermore, you are tying up nearly your entire net worth in a single pile of bricks and mortar that produces zero monthly cash flow. In fact, it does the exact opposite. It bleeds cash every single day through interest, taxes, and repairs. Ben is here to show you that if your money is stuck inside your walls, it cannot be out in the world working for you in the stock market or a private business. We need to stop looking at houses as magical piggy banks and start seeing them for what they really are, an extremely expensive lifestyle choice that consumes your most productive years. Most people calculate their profit on a home using kindergarten math. They take the price they sold it for, subtract the price they bought it for, and celebrate the difference. This is a massive financial hallucination. To understand the true cost of the house trap, you have to account for the vampire costs that drain your wealth in the shadows. Your mortgage payment is actually only the minimum amount you will pay every month, whereas rent was the maximum. Let us look at property taxes. In many areas, you will pay roughly 1% to 2% of the home as total value every single year to the government just for the privilege of owning it. Over a 10-year period, that is 20% of your asset value gone forever with zero return. Then, we have the maintenance vampires. A house is a physical object subject to the laws of entropy. Roofs leak, HVAC systems fail, and foundations crack. The standard rule of thumb is that you should set aside at least 1% of the home's value annually for repairs. If you buy a $500,000 home, you are likely spending $5,000 every year just to keep it from falling apart. Over 30 years, that is $150,000 in maintenance alone. When you add in the cost of homeowners insurance, which seems to rise by 10% every year, and the thousands of dollars spent on landscaping, cleaning, and nesting, the math becomes terrifying. By the time you finally sell that house for a profit of $200,000, you have likely spent $300,000 just to maintain and tax it. Ben wants you to realize that a house is a depreciating consumer good disguised as an investment. It is an asset for the bank and the government, but for you, it is a constant drain on your liquidity. This is the specific concept that keeps Ben up at night because it represents the unseen tragedy of homeownership, opportunity cost. Let us imagine you take $100,000 of your hard-earned savings and use it as a down payment on a house. From that moment forward, that capital is dead. It is buried in the dirt under your feet. It is not moving, it is not innovating, and it is not compounding. If you had taken that same $100,000 and placed it into a diversified index fund or a high-growth stock portfolio returning a steady 8% to 10% annually, that money would double roughly every 7 to 10 years. By the time you reach the end of a 30-year mortgage, the person who chose to rent a modest apartment and invest their down payment instead could literally be a multi-millionaire. The house trap uses the emotional argument that paying rent is throwing money away, but they never mention that paying 6% interest to a bank for 3 decades is also throwing money away. In the first 15 years of a typical mortgage, almost your entire monthly payment is consumed by interest. You aren't building equity, you are just renting the bank's money at a very high price. Ben believes that in the 21st century, liquidity and mobility are the ultimate currencies. If you are house poor, you are anchored. You cannot take the risks necessary to achieve true wealth, such as starting a company or investing in a volatile but high-return asset class. The house trap convinces you to settle for the slow, grinding path of home equity while the real wealth-building machines of the world pass you by. You aren't just paying for a house, you are paying with your future financial freedom. Human beings are psychologically wired to love big numbers, and the real estate industry exploits this flaw brilliantly. We love the cocktail party story where someone says, "I bought this house for $200,000 in 1995 and sold it for $600,000 today." It sounds like a massive win, but Ben understands the inflation illusion. Over a 30-year period, the purchasing power of $1 drops significantly. If inflation averages even 3%, your money loses approximately half of its value every 24 years. This means that if your house tripled in price over 30 years, you haven't actually tripled your wealth. You have simply kept pace with the devaluing currency. You have more smaller dollars, but your ability to buy goods and services remains largely the same. When you adjust for inflation, many residential real estate markets have shown near zero real growth over the long term. Now, subtract the vampire costs we discussed earlier, the property taxes, the interest, the insurance, and the renovations, and you will find that most homeowners are actually losing wealth in real terms every single year. Real estate agents will show you beautiful charts of rising prices, but they almost never show you an inflation-adjusted chart that includes the total cost of ownership. Meanwhile, the companies in the S&P 500 are actively producing products, expanding into new markets, and generating real profits that far outpace the slow, stagnant growth of a single-family home in the suburbs. Ben wants you to stop measuring your success in nominal home equity and start measuring it in real purchasing power. A house is a wonderful place to raise a family and hang pictures on the wall, but from a purely mathematical standpoint, calling it a great investment is often a total fabrication. If you want to see a document that explains why most people never get ahead, look at an amortization schedule. It is a mathematical roadmap of how banks stay rich and you stay stuck. If you take out a $400,000 loan at a 6% interest rate, you will end up paying the bank back over $800,000 by the time the loan is finished. You are literally forced to buy one house for yourself and an entirely separate house for the bank. For the first half of the loan's life, your payments are almost entirely interest. You are a debt slave for the best years of your working life. This financial pressure creates a massive psychological burden that forces people to stay in high-stress jobs they hate because they are terrified of missing a single mortgage payment and losing their investment. This fear is the silent killer of entrepreneurship and creativity. Ben has seen thousands of talented individuals who had the potential to start the next great tech company or build a successful local brand. But they couldn't take the leap because they were anchored by a massive monthly mortgage. The house trap creates a compliant society of people who are too scared to move, too tired to innovate, and too broke to invest in themselves. True financial freedom is not about the size of your backyard, it is about having low fixed costs so you have the optionality to say yes to big, life-changing opportunities. When you own a massive house that requires high-income salaries just to keep the lights on, you don't own the house owns you. You have become a high-end tenant of the banking system, masquerading as an owner while the bank collects the real profits. So, after all this, what is the alternative? Does Ben want you to live in a van down by the river? Absolutely not. The solution is to psychologically and financially decouple your housing from your investing. You must begin to view your primary residence as a lifestyle expense, exactly like a luxury car or an expensive vacation. If you want a big house and can afford the vampire costs without hurting your future, then buy it for the enjoyment, but don't lie to yourself and call it an investment. Ben's strategy for true wealth is to rent a place that fits your current needs. Keep your fixed costs as low as possible, and funnel every single extra dollar into productive, liquid assets like stocks, bonds, or your own business. If you feel a deep emotional need to own real estate, Ben suggests house hacking. Buy a duplex or a triplex, live in one unit, and rent out the other so that your tenants are the ones paying the vampire costs and the mortgage. Or, look into forced appreciation by buying a fixer-upper in a high-growth area where you can actually add value through smart renovations. But whatever you do, never buy a forever home in your 20s or 30s under the false pretense that it is a shortcut to wealth. The real shortcut to wealth is liquid capital and the unstoppable power of compound interest. Wait to buy that sprawling dream house until your investment portfolio is large enough to pay the mortgage for you. That is the fundamental difference between being house rich and being actually rich. Ban's goal is to see you with a bank account that gives you infinite options, not a mortgage that gives you 30 years of chores.